This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network and Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.
Hello, this is Soueidan, co-founder of GeoInvesting. Glad to be here at Bobby's event. And, I wanted to give a pitch on a company, Konatel, but I decided, hey, why not better just interview management as part of my pitch? So I have here today Sean McEwen, the CEO of Konatel. For full disclosure, I do own shares of Konatel. I bought the stock in this year, 2021, at around, I think, 40, 50 cents originally, and at some lower prices also. He's interested. He's in the Konatel participates in the cloud communication industry, and if you have followed GeoInvesting or myself and some of my investments in recent years, I've kind of been attracted to this industry, and I own other stocks. So when this came across my plate as a potential company to look at, I was pretty excited. Actually, it came across my plate from Chris Plum, who's a microcap investor, and I really appreciate this idea. Was forwarded to me by him, and we wrote an article about the company on GeoInvesting by one of our research contributors, and Glenn Buxamundi. I'm sure I butchered that name, but so we have here Sean today, and so hey, Sean, great to be here. I really love interacting with you over the last several weeks. So let's get right into it.
Awesome. Thanks, Maj.
And why don't you start by giving us, what do you do?
What do I do? What do we do? In about one sentence, I would say that we're a software company first, meaning that we build and develop our own software applications inside, but we take that software, put it into a cloud format, and through that, we deliver hosted telecommunications and data services for small and medium-sized business.
Great, and I want to get right into the first question that everyone's probably going to have here who follows this industry is how are you different? I mean, there's so many different companies in the UCaaS. You got different labels that of different cast labels here. So why don't you go over those? UCaaS, PCaaS, right? Is that right?
Sure.
And talk about where you fit in that and how you're different or complementary to some of these other companies.
Okay. Real quick, UCaaS companies are probably far more prevalent than CPaaS companies. UCaaS, the acronym, our industry is filled with all these acronyms, stands for Unified Communications as a Service, Unified Communications. UCaaS providers typically provide hosted phone systems, voice, SMS systems, where, in fact, if you look behind me on my desk, that desk phone back there, that's a UCaaS hosted PBX or business phone system. CPaaS stands for Communications Platform as a Service. You might think of us as we're the guys behind the curtain, where a UCaaS provider interacts with a customer providing that desk phone in the office. We may in turn, depends on the UCaaS providers, we'll provide the dial tone to them, the phone numbers to them, we'll route the calls, terminate the calls. And we've even morphed over the last couple of years. We started just as CPaaS, but really expanded into more of a generic platform as a service or PaaS company. And when I say PaaS besides communication, because we also provide data services. So we provide voice, SMS, data, SD-WAN, a whole litany now of services based on the platform that we own. We own a national network with multiple points of presence throughout the United States. So like I said, kind of the guys behind the curtain, you might say.
Great. So some of the other companies that, let's take that aren't, in the platform portion of this, they might have a few things here or very, very targeted solutions. And if they wanted to add a solution, I'm going to have to maybe even use someone like you or build a solution themselves or go acquire a company. So you're basically this one-stop kind of solution for maybe even a UCaaS company to add pieces to their platform, right, or to their service offering.
We could, in fact, a UCaaS company could host its voice platform within our larger network. Similar, you might say, to like an Amazon AWS. So we could provide servers to them. They could host that UCaaS platform, and highly integrated into our voice, data, and SMS network. I probably didn't even mention we even provide mobile services. So besides fixed line, we provide mobile voice and mobile data solutions. Some people refer to mobile data as IoT, is kind of one of the hot buzzwords there.
A recognizable public company we could compare you to that people would know who they are, a bigger company maybe?
On the CPaaS side, or the voice and messaging, we're similar to Twilio. We provide some of the same voice services as Vonage. We don't currently have a UCaaS offering today, and that's really by design. It's something that we might add in the future, and because we have the platform, it's not as difficult to spin up a UCaaS offering. So those are a couple of companies that people might know of that we're similar to, which is not as big as they are.
Great. So before we get into some of the different revenue sources of your business, now actually there's other pieces of your business too. You have this lifeline business I really want to get into.
Sure.
But why don't you give us a little brief kind of elevator pitch on that piece of the business?
Right. So real quick at a high level, we have probably two main segments in the company of hosted services. So those hosted services are what we've been talking about: CPaaS services, platform services, DIP services, and then we have our mobile services. And mobile services includes regular cellular, wholesale, and retail cellular service to small businesses. We don't provide services to consumers. We go after the business market. And within that segment, within mobile services, we have lifeline services, or it's basically what that is cellular service, voice and data service that's subsidized by the government through a program that started in 1984. You could probably trace the roots all the way back to the 1930s, but really 1984, 85, and the Telecommunications Act during that time under President Reagan is when this program started. It was basically a way to provide minimum basic phone service to low-income Americans. It's similar to providing other basic utilities like electricity. And we hold.
Is that like a track phone? Would that be one of those companies?
Track phone is all right. So track phone, it was recently acquired by Verizon. Track phone provides a service to consumers, but they also have a group within them that provides this government subsidized phone service called Lifeline. There are, the count changes from time to time. There are around 11, maybe 12 companies. We're one of them that holds a national wireless Lifeline distribution license. And that license comes from the FCC, the Federal Communications Commission, and the FCC has not issued any new approved Lifeline compliance plan since 2012. So for 9 years, it's basically a moratorium. What that license allows us to go out through the United States and apply to provide Lifeline services at the individual state level. So right now we have the national FCC license that we call that approved compliance plan. And then we have 8 states that we're authorized in today, and so through those 8 states, we go out and provide this cellular voice and data service, and through a fee collected on phone bills, Universal Service Access Charge, I think is the acronym, USAC. The money comes to us carriers to help offset the cost of that service. So that service can be provided at a very low low cost, sometimes depends on the what's bundled, sometimes at no cost, and it's limited to Americans that meet the threshold for low income, below the low income level. Typically, these would be people that might be receiving food stamps. They might be living in Section 8 housing, and we provide the service for a year. And after a year, if the people still qualify, then they can re-up for another year.
Thank you. Now, in terms of revenue distribution between your segments, can you talk about that a little bit? And especially maybe even break out a Lifeline separately from everything else too.
So I would say we're almost evenly split between mobile services and hosted services. Of the mobile services, or I would say Lifeline in general accounts for about 21, maybe 22% of our total annual revenue. So we're not depending on it or dependent on it. You could probably say we don't have all of our eggs in one basket. We have I believe a really diverse suite of revenues between the hosted services, mobile services, data services, DIP services. There's about 5, maybe 6 main streams of revenue. And with the Lifeline service, what's kind of interesting is I look at it as almost a hedge during a downturn in the economy. And we're living through one right now with COVID. And so it's nice to have that revenue stream, especially during a down economic time.
And both your I guess your growth kind of drivers right now were both companies that were I guess acquired, right? You acquired these companies.
Yes. So
a few years ago. So talk about that kind of acquisition strategy and that
okay.
kind of company.
So I can tell you real quick. Konatel I started Konatel in 2014 as a cellular reseller. We call that an MVNO, mobile virtual network operator. Companies like TracFone, those are MVNOs. MVNOs, typically we don't own our own cell towers. We'll buy capacity from carriers like AT&T and Verizon and market under our own name. So that's how Konatel started. Then in about 2016, I started to map out a strategy to diversify away from just exclusively cellular. And this is before the company went public. And I wanted to go back to my own roots, my own software development roots. That's an area I understand pretty well, and get into hosted services. I thought it was important for Konatel to own intellectual property, to own its own infrastructure, to have that tangible value. When you're just a reseller, you're buying something for $1 and selling it for $2, and you really don't own that intellectual property. So
and also you have this ability to kind of really guarantee quality and more so than these MVOs and those can too. So you have a much more control of your network, more efficiency in the way it's delivered, I guess, right? And just better quality.
Yes, kind of deviating then for a second along that question, we refer to this as extending the network to the edge. So Apeiron, that's the hosted services company, and is one of the 2 wholly owned subsidiaries of Konatel. It owns its own national network, and when I say owns it, it owns the computers, the switches, the software. It doesn't own the physical cables in the ground. I don't even companies like AT&T lease cables, not all their cables, but cables and fiber optics through the ground. But by owning our own national network, it allows us to control the quality. And since we can control the quality, we can offer what's called an SLA, or a service level agreement. So by contract, we can give a guaranteed level of service to our customers. Because we own the network, we talk about, and we added SD-WAN, we can now extend our network right to the doorstep of a company. Right to their physical location. So it allows us then to extend that SLA right to the doorstep. I know kind of we deviated there for a second, but kind of back to the acquisition strategy. So when Konatel was mapped out that strategy in 2016, part of the strategy was for Konatel to move into becoming a software holding, or a communications and software holding company, to acquire other companies. And that was the purpose for going public. So within the first year, I closed the first two acquisitions. One is our hosted services company, Appearon Systems, and the other one is Infinity Mobile, which is that Lifeline company. And you were asking about Lifeline earlier in that process. It took almost 3 years just to find a Lifeline company we could acquire. And then it took almost a full year just to get FCC approval. You go through a pretty detailed background process. Your company and the people running the company go through a personal background process evaluation. So it was about a 3-year process to acquire Infinity Mobile, and that acquisition was finished in 2018. In fact, both the acquisitions were finished in 2018. We haven't done any acquisitions since for almost 2 years, because it took about a year and a half just to incorporate the two acquisitions into the company. We had some cleanup work to do on the Lifeline company, and now that company is actually all our companies are basically debt free now.
Why don't you so yeah, you acquired these in 18, Appearon and the Lifeline business. Maybe now, can you discuss some of your growth you experienced over the last couple of years?
Yes.
Where you're sitting at now, including your 2020 performance.
Okay. Growth first started with moving from negative earnings to positive earnings. So when I talk about cleanup, one of the things we've been doing for the last couple of years is shedding a lot of the low margin business. That took a while to ease out of that business, especially when you're doing.
And that was your MVNO business, basically your legacy business, right? A lot of
it was mostly the wholesale side of the legacy business. Exactly, those were very, very low margins. Some were far below 5%. So that just wasn't the business we wanted to be in. You know, that can be a good business if you have enough volume, but we're after more of the higher margin, direct to small and medium sized business, those opportunities. Because with those opportunities, we can go and bundle services. We can bundle voice, we can bundle data, we can bundle mobile, we can bundle SD-WAN. And when you start bundling these services, your customer becomes a lot more sticky, and you get good high margins. So I don't think I answered that question.
And that was good. So that's okay. But we have a lot to talk about in a few minutes.
All right.
I know it's difficult, but thank you, Bobby. So let's go to your 2020 performance, where you're sitting right now. Talk about that a little bit, what you accomplished, what you want to accomplish, and I want to really come back to Lifeline, because a really big development happened recently in the Lifeline business, which I think really got me excited.
Okay. So from 2019, so 2019 was from 2019 to 2020. I would say 2020 was kind of the cleanup year. You can tell from revenues went up slightly in 2020, and I think it was about 2.5% increase in top line revenue. And considering the middle of COVID and all the other headwinds that have faced our economy, I think we did pretty well. On the earnings side, I think we knocked it out of the park. Little over 700% improvement from, in rough numbers. I should have like a cheat sheet or something here, but somewhere around about $1.5 million, I think, negative in 2019 to about a quarter million positive in 2020.
One of the interesting things too is, like, if investors were to look at your numbers, on a consolidated revenue basis, they wouldn't see necessarily the growth, but if you look at the individual pieces of the puzzle, like and the most exciting parts of your business, they're growing nicely here.
They are. The big focus was on margin, growing, getting into profitability. Remember, our company is 100% has been growing completely based on cash flow. I'm the type of person who's a bit resistant to turning on the printing press and diluting. I'm the largest shareholder of the company, and I certainly don't want to dilute myself along with my fellow shareholders. So instead of doing a raise and diluting at what right now is a pretty low valuation, I believe, we just hunkered down and said, you know what, we're gonna do this manually, the old-fashioned way, through internal growth. So getting to cash flow positive. First, we got to EBITDA positive, then we got to net income positive and cash flow positive, and shed. There were also some long-term debts, well over $1 million worth of debts. The company has been paying off all those old legacy debts. So today, except for maybe a PPP loan or an EIDL loan through the COVID rescue plan, we're basically wiped out all those debts. Cash flow positive, EBITDA positive. Now the focus is on top line, but we needed to get to that profitability, because that's what funds growth. And for us, growth comes from hiring people. That's our number one asset. Other companies have plant and equipment and factories. Our plant and equipment are the people in the company. So that cash flow lets us go out and hire more talent. So that's been the focus. And like I said, you look at the numbers from last year, about 700% increase in net income. Like I said, I wish I had the sheet in front of me. There are a few more.
That's fine, but actually, too, is what I like here too is you kind of gotten to where you've gotten today without really a really aggressive sales and marketing effort. And I think moving forward, you're at that moment now where you're ready to start turning that on. And what's interesting also is, I think, and it's a good segue into Lifeline, is that with some of the developments that are going on in Lifeline business, you're going to get some more cash flow coming in. So you're going to be able to actually probably step up that growth.
So I'll speak to that in sales real quick. It's a little embarrassing to say that we've been growing the company, sit around waiting for the phone to ring. I don't know if you heard the saying in sales, there's two types of salespeople, hunters and farmers. Well, embarrassing to say we've been farmers all this time, just waiting for the crops to grow. We just hired our first full-time true director of channel sales in the company's history. So now it's switching from farmers to hunters and going out and hunting for deals and taking a proactive approach to sales. On the Lifeline side, you mentioned about some of the new things happening there. About 5 weeks ago now, maybe 6 weeks ago, the FCC voted unanimously, all the commissioners voted unanimously to expand and create a new program called the EBB. I think it stands for Emergency Broadband Benefit Program. They allocated $3.2 billion to this program. And
that was kind of tucked into the stimulus bill, right?
It's hard to sometimes track the flow of money in Washington, where the money comes from, and which stimulus bill and which relief bill that's going on. Right, there've been so many. There's trillions of dollars being printed, but I can tell you that about 3.2 billion was allocated. And this information is all available publicly to this EBB program, and it's a one-time funding. We don't know if the program will be refunded next year or whenever that $3.2 billion runs out. But in the meantime, what it will do is it'll provide an additional $50, at least for our scenario, an additional $50 per line per month. And this will allow us to go out and bring the service to areas that we couldn't economically serve in the past. We've been offering unlimited voice, text, and data plans for quite a while, for a number of years actually. But there were a number of areas in the country that we just couldn't bring this plan to. The economics didn't work, but now with this extra funding, the economics work. So
it's not only that; it's like a situation where you approved in 8 states.
That's right.
And you're basically only been operating really in 1 state because of certain things we don't have time to talk
That's
about
right
now.
So we've been operated primarily, not exclusively, but primarily in Oklahoma, and mostly because there's an additional subsidy that comes for tribal areas, for Native Americans.
So now you have so now you can go there, and now you can start going to these other states where the subsidy was not near as big. And now you also have basically maybe more incentive to even go outside these 8 states and more aggressively trying to get more states.
There's no doubt with that, because we have that FCC approved compliance plan, kind of a national license, if you want to call it that. Yes, we'll rapidly push into the other states, but just in the 8 states that were authorized now, I mean, you're talking thousands and potentially thousands of activations per month. There are some Lifeline carriers activating today over 100,000 new lines per month prior to this additional money.
Now, without getting into your pricing internally, but you have X amount of lines already you're servicing, and this is just going to be once this is turned up.
Right. So we have about 6,000, almost 6,000 lines now, and
if you take
revenue will increase from $34 to about $84.
Just for doing nothing, basically, just for having these lines.
Well,
that's basically...
we'll have to provide unlimited data for those lines, but the incremental cost with the extra money, we can deliver the unlimited data, cover those extra incremental costs, and still have some amount left over.
All right, so you basically just you're going to get, before you even go hunting for more.
Right.
You have more lines you already have overnight. Going to have this potential here to, on a monthly basis, to get this increase in revenue.
Right. Well, we go from $34 to $84.
Yeah. Which obviously can put you in a better position now to go, even maybe be more aggressive in some of your marketing efforts in your Aperion side of the business. So,
well, one of the things, again, I mentioned about building a company from cash flow. The plan is to utilize that positive cash flow from Infinity Mobile, which is we call that an ETC, eligible to communicate telecommunications carrier, and we shift money between the companies as needed. So now that company will have quite a bit of surplus cash each month. We'll use some of that obviously to continue to grow that company, to fund its growth, but the true surplus cash will be redirected over to Aperion. And that money would be used for hiring more staff, sales-related people, and salespeople also means like sales engineers to support the sales channels, to take that more proactive approach. Like I said, hunters versus farmers.
Great. And we're running out of time here.
No problem.
So I want to basically remind people, hey, we at Geo Investing, we have a full article on the company and some videos with Sean there to get, if you want to dig deeper into the story. But we need to end up. We've been talking all the bullish things here. We should definitely talk about some of the risks and caveats to investing in your company, Sean. And what are some of the things we need to be aware of on that front? You got customer concentration, other things.
You know a little about my background, spending almost 4 years in the venture capital world. I'm used to being on the other side of the table, the skeptical side of the table, which is, you told me all the good stuff. Now I want to hear about the bad stuff or the risk areas. And so probably the most obvious is, will we execute on the plan? I think probably the greater risk areas are, we have limited resources. When you're self-funded, you have limited resources. So if Lifeline starts to accelerate, like I think it will, we'll need, we can fund that growth several thousand lines a month, no problem, because we have the cash and the cash flow to support that. But let's say that we started hitting 10,000 activations a month, 20,000 activations a month, then I'm going to have to go out and find additional financial resources to support that growth, because you're talking about that could be $1 million or $2 million a month worth of commissions and phones. Now that's obviously a good problem to have, but that that's a risk area. Will this new expansion of the EBB program, will that be refunded when funding runs out? I don't know. I can't predict what happens in Washington, but there is a backup plan to that. If we sign up 5, 10, 20,000 lines under that program and the funding either is reduced or goes away, we'll go back to the customer base and we'll be able to continue to offer them service, and all they have to do is pay a small co-payment. Attracting good talent, this is a risk area. We're a software company, and so you're competing against Facebook and Google and PayPal and a lot of really big name companies that pay big salaries. That seeking out, retaining good talent, that's a challenge.
Okay, and so overall on the hosted side, is there a specific risk you want to talk about on the hosted side of the business besides that could be what we got to worry about?
On the wholesale side?
The hosted communications.
Hosted. On the hosted side, yes, we have concentration in a couple of key customers. You want to obviously diversify that. Our largest customer, I can say on the positive side, has been with the company for 6 years, and that customer signs 3-year contracts. We've got about a year and a half, maybe almost 2 years left on that contract, but they've re-upped the contract several times now. But bringing in additional sales, again, going out and hunting for sales so that we're not as dependent on a couple of key customers. So that's a risk area. Like I said, luckily these on the hosted side, customers sign 2- and 3-year contracts, and they have contractual commitments in those contracts.
Excellent.
So we've got to diversify that customer base more.
Great. And finally, I think we should end this on why Sean. Give us a little your 2-minute pitch on your history and why we should have confidence in you run this company.
Well,
a little bit of what you did in the past.
This is well, okay. I always say luck's a factor. I don't care how hard you work and how smart you are. Luck's a factor. I had my fair share of lucky breaks, but this is my second major venture. My first company I started, I was CEO for 17 years and had a successful exit. That company created the modern day 911 dispatching system used all throughout North America, parts of Europe, and the Pacific Asia part of the nation. That company started in '83. I started that with my business mentor, and I was CEO until 2000. Had a successful exit in 2004, 2005, can't remember the exact year. Controlling interest was sold to Westview Capital Partners. And so I've lived through this metamorphosis you have in a technology software company. You start off as a very engineering-oriented company, a bunch of software geeks like myself building software, and at some point, now you built your cool software, but you sure as hell better go out and sell it. So transitioning from a technology-oriented company, engineering mentality, to a sales mantra, critical. And we're going through that right now with Konatel. So you had this very engineering-oriented development cycle for many years. Building the Apeiron network took years. It took the founder, Josh Plood, and his partner several years to build that network. And it's up and running today. It's very, very well tested. We'll run over 1 billion transactions a month through our national network, and this thing doesn't miss a beat. But now we're at that point where you've got the infrastructure, you've got the network, and we got sales, but we don't have enough sales. So, like I said, this year, 2021, is this metamorphosis of morphing into a sales-oriented company. I've lived that before. And it wasn't just me. I've had a whole team of people in my old company. There was well over 100 people in that company. So the key, I believe the key is going out and hiring people that are better, smarter, faster than you are, and putting that team together. So it isn't, as the cowboys say, it's not my first rodeo.
Thank you, Sean, so much. Again, the symbol is KTEL. And we were here with Sean McEwen, CEO of Konatel. That's it. So thanks for listening. Thank you, Sean.
Great. Thanks, Maj.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network and Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.